Welcome to the Funeral Funds Life Insurance Podcast. I'm your host, Randy Vandervate from Funeral Funds of America, and you can find us at funeralfunds.com. That's funeral, Funds.com. Whether you're interested in term life, whole life, mortgage protection, annuities, disability, business continuation, or final expense life insurance, we have you covered. Our team of experienced professionals will guide you through the complexities of insurance products to help you make an informed decision. In this podcast, I'm going to be discussing life insurance and Medicaid recipient planning. Boy, this is a hot topic out there, and we get a lot of calls on this because once somebody qualifies for Medicaid with burial, cremation, final expense, life insurance for seniors, there's some asset spend down requirements. And when you get a whole life insurance policy, they build up cash value over time, very slowly, albeit, but they do build up cash value. And the Medicaid folks, actually the people enforcing Medicaid get all up in a tizzy about that because they're required to make sure that you meet certain requirements and you can't have more than a set number of assets. We'll talk about that in a moment. It's really not that big of a deal, but they make it a big deal and they tell you that you can't own any whole life insurance. There's ways around it. So let's talk about it. I'm just going to kind of jump in and just start talking here. My biggest message to everyone is start planning early. By the time you qualify for Medicaid or you have a health crisis and you're now eligible for Medicaid, it gets complicated for getting life insurance because number one, to qualify for Medicaid, there's some income requirements. In 2023, it's you got to be making less than $14,580 for a single adult, less than $30,000 for a family of four, and around 50,560 for a family of eight. So there's some Medicaid expansion things that are going on that can kind of increase those income requirements to qualify. Just understand though that by the time you're in that situation, money's probably going to be tight anyway, and you probably have problems affording the insurance, which means you would have been better off getting the insurance when you were younger and it was more affordable than waiting until you were old and probably had some health or medical issues. So don't wait until there's a health crisis or a medical crisis. If you just plan ahead, it helps you make a more informed decision and kind of just more easily navigate the complexities of, insurance and final expenses and budgeting and Medicaid and all that other stuff. So by planning early too, you can avoid the pitfalls that, all the people in the Medicaid department with the state are going to be chatting about, because essentially they want to make sure that you don't have more than a set number of assets. In many cases, it's right around $2,000. That could include like cash, bank accounts, real estate, other than your primary residence, investments that include IRAs, 401ks, all of those count as assets. And the government does not want to give out Medicaid funds to people that have a whole lot of assets. That's not the purpose of the program. Medicaid is for really low income and to a certain extent, people that are, kind of destitute, for lack of a better word, just really hurting financially. So the asset limit is going to be the biggest thing. And the reason the insurance is an issue with that is it does build up cash value. Now, these policies, especially when we're talking about policies that are like 5,000, 10, 15, 20,000, they build up cash value slowly. It's not like you're ever going to be taking a Caribbean cruise or anything off of the cash value on a small policy. But the Medicaid folks, the government Medicaid folks, they're going to get in kind of a tizzy if you even have $15 worth of cash value, because it's their job to enforce the rules and the laws. And that $15 contributes to your total assets. So that's why they're being so picky about it. And the state is going to also, you might be thinking, well, if I qualify for Medicaid, I'm just going to like transfer all my assets and everything to my kids or something. And then that way they will never know and I'll qualify, but I'll still have that kind of as a safety net. Well, the state is going to scrutinize all asset transfers too, including ones made by a non-applicant spouse, and they're just wanting to make sure that you're not gifting or things are being sold under fair market value, and you're just kind of padding your pockets or hiding that money again because they want Medicaid to go to the people who are truly in need, and they are fairly they just play by the rules, right? There's very specific rules. They tend to be non-flexible and non-bending because there's laws around this. And if they want to keep working, they have to make sure that everybody that they're working with is abiding by the laws and everything else. So, number one thing we tell people is, seek professional advice. And professional advice, I just want to tell you, professional advice is not always the state Medicaid person that you're working with. Quite often, they're just a new hire, high turnover job, low pay, and they don't know all the rules. So they'll just say, "Hey, you can't have whole life insurance. You can't buy it. You can never have it." Well, that's not the truth. That's not the truth. There's ways around it, and they're not always well versed on the eligibility rules, or they're not always there willing to help you structure your finances appropriately. That's not their job again as well. Seek out professional guidance beforehand. And again, the wrong time to do this is, when you've had a major health event or, something's gone on with your finances that you now qualify for Medicaid. Because in most cases, again, they're going to have that look back period. A lot of times I think it's right around 5 years. So they're just wanting to make sure that you didn't have a whole bunch of assets. You just transferred those away to a family member or somebody that you care about. And they're just going to kind of hold those for you. And then you're going to take care of all the benefits that the state's offering through Medicaid. And then you've kind of got all this money on the side. They want to make sure that's not the case. And they are rigorous about that. So, where does life insurance fit into all of this? Well, number one, uh, you should always get your life insurance earlier than you need it, right? So many people wait until they have a major health event or just some sort of event in life that makes them need the insurance, and then they try to get the insurance, and maybe you just had a heart attack or just diagnosed with cancer or something like that. That's the wrong time to be getting in final expense insurance or life insurance, right? You need to get this insurance before you actually need it, because at that point, when you've just been diagnosed with cancer, the only policy you're going to qualify for is one with a 2-year waiting period. Now, if you've been treated for cancer and it's been cured and it's been more than 2 years, we can get you first day coverage. But just kinda like everything, planning, if you've ever owned an automobile, and most people have, you didn't wait until you got into a car accident to get the insurance, because the car insurance company would think you're crazy if you said, "Hey, I just crashed my car, and now I need to get some insurance that's gonna pay out right now from the very first day, and I'll be happy to make my $100 payment if you'll just replace my $40,000 car." They would say, "You're loco," right? They would say, "We can't do that. You would have need to have the insurance beforehand." Insurance, the purpose of insurance isn't for you to get in a crash or have an accident or have a medical problem and then get the insurance and have us pay, because the insurance companies would go out of business within 30 days if they did that. So understand, get this insurance early. And one thing you can do if you're ever even remotely concerned about going on Medicaid, which, you know, if you don't have enough assets and you're kind of living paycheck to paycheck, based off Social Security, that may happen someday because most people are just one health issue away from, medical bills and stuff devastating their finances, and boom, they're on Medicaid. So one thing you can do is have somebody else be the owner of the policy, right? It could be a child, when you're children. You wouldn't necessarily want it to be a spouse because the spouse is under the household and that would qualify under asset limits there too. But just have somebody you thoroughly trust be the owner. You can still make the payments, right? Because you can get your Social Security and, whatever. You do have money that you can spend on whatever you want. You would just have to transfer that money, pay that money to the policy owner and have them pay it or something to that effect. It varies state to state. Just understand that you can do that. The other thing you can do is if you have some cash value in the policy, You just spend down the cash value. Now, if you had a $20,000 policy and you had, $400 in cash value, you could pull that cash value out and spend it on expenses or whatever it would be. And now you no longer have cash value in the policy, but your policy would only pay out $19,600. If you got a $20,000 policy, not a big deal. Um, so just be aware there's some different things you can do. You might want to consider an irrevocable trust, but a lot of this stuff has to be done before you're actually going into Medicaid and qualifying for Medicaid and everything else. So again, we recommend you consult with experts well in advance. Do not wait until something bad happens that you start looking at this and taking care of this. We've actually got a really great article on our website. I'll put that article in the show notes, and you can read through that, and it gives you a bunch of tips. And that way you can be educated when you go in and talk with your financial professional and stuff like that. Just be aware there's a lot of people in the United States that at some point in the future they're going to be on Medicaid. So you really should be checking into this now versus just keep putting this off and off and off and off and off. You know, had a gentleman call yesterday and he's 78 years old and he's looking for it and he goes, I can probably afford about 20 bucks a month, for my insurance. And it's like, well, it's 78 years old, and you're wanting a fancy funeral, that's going to be a difficult one there. And he just waited too long. Everybody knows that we're going to die. I think by the time we get to at least age 18, we know we're going to die. And I think people are so busy living that they forget that they're going to die someday. And there's some things that need to be taken care of. And in many cases, you might just have to dedicate one weekend out of your life to kind of get this stuff in order and take care of it. And that will probably take care of you for a lifetime. So there you go. That's just a little bitty high level conversation on life insurance and Medicaid recipient planning. My name is Randy Vandervate. I hope this podcast has been helpful to you. Funeral Funds of America can help you qualify for first aid coverage or benefits at funeralfunds.com. That's funeral.funds.com. And our phone number is 888-862-9456. We will be blessed to help you with this in the future. Until that day comes, stay safe, take care, and have a nice day. Bye-bye.